Right, welcome back, everybody. So last that we left off was we finished ordering our flyers to city printers. Okay, and we've already given them our deposit or our prepaid accounts, which goes towards the bill, and we pay with a Visa payable. So here we recognize that we did a prepaid account and we used our Visa payable to pay for the items. Okay, so the next thing that we're going to be looking at is going to be here. So on continuing on Wednesday, we received inventory, okay? Okay, yay. Okay, so let's look at this carefully. Okay, so we received regular coffee, and that's going to be moving average, and it's perpetual. Okay, and then for Supreme Coffee, it's going to be perpetual and FIFO. Okay, so understanding that, okay, that, say that again, David. So if we pull up our inventory worksheet, which that's not it. If we pull up our inventory worksheet, I've already placed it at the top of the headings. So on regular coffee, right here we have moving average, and we know that it's perpetual. Okay, so I'm going to make this a little bigger so everyone can see. Oops, that's a little too big. Okay, so here you go. So it's moving average and it is perpetual. Okay, so this familiar table looks familiar. Okay, and then lastly, we recognize that Supreme Coffee, okay, is also perpetual, but it's also FIFO. Okay, so that's just to give us a reminder. We filled out the table, so now all we need to do is fill out the information as we make purchases and as well as we make our sales. Because remember, the sales, anything that affects inventory, you're going to have to constantly update it. Okay, so here, I guess we could fill out the table now since we have it here already. So here it's going to recognize, where is my scenario? That we received our inventory. Okay, so let's go ahead and scroll down. We received 125 pounds worth of regular coffee, and it cost $1.35 each. Okay, so here I'm gonna go to my regular coffee, and the date is going to be the 12th. And we recognize that we didn't sell anything yet, so we're gonna go straight to the middle part, which is our workspace or our inventory on hand. And we bought 125 at $1.35, okay, which should give you a grand total. Oopsies, my finger slipped. So it's going to be okay, and we're gonna multiply it to get a total of 168.75. Okay, and that's all we know as of right now. And then for my Supreme Coffee, I believe it says that we got 125 pounds at 155 each. So the date is 6/12. And we know that we got 125 at $1.55, which should give us a total of 193.75, which is correct, which is exactly what we have recorded on our scenario right here. Now, because we received a bill, okay, we need to recognize a few things. Where did this bill come from? It came from Atlas Coffee. What's my invoice number? 315. Okay. Is there terms or anything? Yes, we get a 1% discount if we pay within the 15 days, and our total amount due is going to be for $362.50. So let's go ahead and go to our journal and let's journalize that. Okay. So first thing is, How do we journalize this inventory? How do we journalize this inventory?
Regular coffee,
Good. Regular coffee.
Supreme coffee, and accounts payable.
Good. Good. Why did you use supreme and regular coffee?
Because that's what we got in.
Okay.
It's on the invoice.
Okay. Why can't we use purchase expense?
Because it's not a purchase order. It's already come in.
Okay, that's okay. You're kind of close.
Purchase order's inquiry.
What do you mean by that?
It came in. And, we made the.
We're not talking about purchase orders. She's talking about purchase expense. Why can't you use purchase expense instead of regular and supreme coffee?
Because that's what was on the order. Regular coffee and supreme coffee.
Okay. Yes, but what system are we using to track the inventory?
Perpetual.
We're using perpetual, right? Everything goes straight into inventory depending on the specific item that you purchase. That's correct. If we're using periodic, that's where we're buying an expense. We're not buying inventory, we're buying an expense. Or we're using it as an expense.
Don't forget, periodic. Nothing goes into inventory when you use the periodic system. It all goes in purchase expense. Perpetual, everything goes into inventory. The product, the freight, the insurance, whatever you spend to get it to your door, everything goes in inventory right away. Periodic, nothing goes in inventory until you convert it.
Okay. So, comma, invoice number 315, I believe, comma, 1%, 15, comma, net 30. Okay. So, I'm filling in my description now, but what are my account numbers for regular coffee and supreme coffee? Where do we need to go?
Supreme is 12040. Regular is 12020.
Yes, we got to go to our chart of accounts to find our account number and make sure that they match exactly identical. So 12020 and 12040 is correct. All right. So yes, go ahead.
I want to ask one question. Why can't I just use coffee and be done with it? Why do I have to go to regular coffee and supreme coffee?
Because you have it set up in your chart of accounts where it's regular supreme. And that's what you have to keep it as.
Why? Because there's some accounts, and some accounts give more detail. This tells me exactly what I got in because I'm using sub-accounts. Regular coffee and supreme coffee. That's the purpose of sub-accounts, to give more detail to the overall account, right? Mm-hmm. You want to go down to the lowest detail that you have in your chart of accounts. In this case, regular and supreme. That's the whole purpose of sub-accounts.
Okay.
All right. So how much regular coffee am I recording? How much regular coffee did I buy?
125 pounds.
Okay, but we're journalizing this, so we can't write 125.
Yeah.
168.75.
$168.75. And then how much Supreme coffee did I buy?
$193.75.
Okay, and that should equal to whatever is stated on your bill, right? $362.50. Yes. Okay. And then I've already indicated my little description here that I received this from Atlas Coffee Importers. The invoice number is 315, and they gave me 1% 15 net 30. Okay.
Yes.
All right. What's next?
The general ledger.
Yes, the general ledger. Okay. So let's go ahead and copy everything that you see on the journal into the ledger. So where do I need to go first?
Page 6, regular copy.
Page 6, regular coffee? Perfect.
Yes.
6, okay. Yeah, regular coffee. Okay.
So we know that 6th of June, I mean 12th of June, we purchased 125 pounds. So you can write anything in here. I'm going to write 125 pounds. Okay, just a little detail. Post reference is going to be GJ number 4. And I increased it by 163.75, right? 168.75. Oopsies. 168.75, okay? And because it's my very beginning balance, it should start off with 168.75. Okay? And then if we just go down to the bottom, so it should be the next page, is Supreme Coffee. Supreme Coffee.
To the next page.
Yeah, to the next page, 7 should be.
The 7 is blank.
Oh, okay. I think it might be page 8.
It's on 8, yeah.
Okay, because the regular coffee, yeah, we're gonna be buying a lot and selling a lot, so we need to make sure that we have enough space. Okay, post reference is going to be your general journal number 4, and we increased it by 193.75. Okay, which we know the beginning amount is 193. Oopsies. 193.75. Ooh, that was a close one. Okay, so 193.75. Okay. And then lastly, we need to update our accounts payable.
Yes.
Okay, so here I'm going to indicate 612. My item's going to be invoice number 315.
What page are we looking at?
17.
17.
17.
Top of page 17.
I got it.
So general journal number 4. And we owe more money. And we, in our journal, we credited for $362.50. So therefore, I'm going to increase my liability. And I should get $14,116.40 in my account.
Can you hold for a second before you leave the page?
Yeah. I wasn't gonna leave.
Oh, okay. Thank you.
I have a question for you, Lynn.
Uh-huh.
Okay, why was one moving average and one FIFO? Shouldn't they both be FIFO?
Remember, we can choose the accountant or whoever wants to choose the best way to calculate it. It just depends on whatever the accountant or the inventory manager tells you. So in this case, I want to have one of them to be moving average and one of them to be FIFO. And also, this is also because of scenario sakes. I want you to be able to experience as many inventory costing methods as possible.
Your total inventory does not need to be one set method. You can divide your inventory into different tracking methods. That's what we did here. We have 4 different tracking methods for 4 items of inventory.
Lynn, can you move the page a little bit to the left?
Left?
Yes, under the items.
I just put invoice number 315.
Oh, okay, yeah, that's what I have, okay. I wasn't sure if you put anything else there.
No, I just want to recognize that the reason why I have an increase in the payables was due to a bill.
Okay.
Okay, and here I have my invoice number, which is 315. And where would I find that? I can find that in my general journal, which is going to tell me I received it from Atlas Coffee. So, okay. So once that we've finished that, where do we need to go next?
To the next subsidiary account.
Yes, we got to update the subsidiary account. So here is my subsidiary ledger. I'm going to make it big. Okay. So we got this from Atlas Coffee. So let's go make sure we go to Atlas Coffee Importers. And we're going to indicate 6/12. Okay. I'm going to also indicate that we got a 1%, 15, comma, net 30. So what's my discount period if I were to make it?
Within 15 days, you get 1%.
So what date do I need to put on there to make sure that I meet the discount period?
June 27.
June 27. So I'm going to go ahead and indicate that right here in my items because I don't have a discount period option, but I'm going to go ahead and write that in there so then I know if I pay within there, I can take a discount. Invoice number 315. Post reference, general journal number 4. Okay, due date. What is the due date in 30 days?
In 30 days, the 12th of next month.
Yes. So that's going to be July 12th. Okay? Right? July 12th? Okay. We did not pay anything ahead of time. And our invoice amount was $362.50. Okay? And because we didn't pay, if you put the formula in here, so again, it's going to be your invoice amount, subtract any prepaid, subtract any returns and allowances, subtract any discounts, and lastly, subtract any payments, which you should get a total amount of $362.50 that you owe.
Yes.
Okay? Okay? All right. And we already updated our inventory worksheet. So from here, we don't need to do anything else. Okay? So let's go ahead and keep reading our scenario. So we've already journalized our transaction, and we already had our accounts payable. So the next thing it's going to say is that we actually got a shipping charge that we had to pay in advance with cash. So it's a cash on delivery, and it's from the vendor Freightline. Okay, and they charged us and sent us a bill for $482, and they charged us a total of $62.50 to ship the coffee over to us, because this vendor is in California, and due to being the only supplier, right? They need to charge us shipping to ship the items to us. So here, we're gonna recognize a few things. We're gonna recognize that it's COD, so we need to pay them with a check. Okay, and it's for the amount of $60 to $50. Now, because they're both evenly distributed, or they have both even amount of pounds, therefore we can make an assumption that we're going to just split the total shipping cost in half, because they all weigh the same. Okay, so if we were to do that, how do we split the tax, and how do we journalize this?
Okay, generalize it for regular coffee.
Uh-huh.
$31 to $25.
I lost.
Supreme coffee, $31.25.
Okay, perfect. Okay, so let me go ahead and write Supreme Coffee. And how did we pay them?
By check.
Yes, we wrote a check. Okay, and my account numbers are going to be the same.
Yes. 1220, 12020, 12040, and 10100.
Okay, good. So here I wrote a check. So let's go ahead and do that first. That's the very first thing we need to do. We need to write a check. Okay, so here I'm in my check book, or my check register. And I'm going to indicate right here that I wrote a check on the 12th of June, and my check number is going to be 1512 for $62.50, and my vendor is going to be Freightline. I'm going to give everyone a few seconds for that to catch up. Okay, so then I can go ahead and finish off my description here in my description, okay? Oops, I forgot to even write the date on here. So here, I know that I received a bill from Freightline, okay? It was for invoice number 482, comma, check number 1512. Okay, just to indicate that I wrote a check to them. All right, so my journal is now complete. So what do I need to do next?
You have to go to your general ledger.
Yes, you need to put it in your general ledger. Okay, so where would I find, okay, so I have to go to my asset, because you're correct. Everything, whether it's sales tax, whether it's delivery charges, everything's going to go into inventory. So that was correct. Okay, so I'm going to go ahead and fill this in. So I am in my regular coffee for $6.12.
Page,
Okay, so general journal number 4. And how much did I get charged for?
31,
31.25.
Okay, so because I'm entering something, a second thing in here, I'm going to go ahead and recreate my normal balance, which is going to be your previous balance plus any debits minus any credits. Okay, and I should get $200 in my current inventory. Let's go ahead and solve for the freight for the Supreme Coffee.
What page was it? Oh, that's, I got it.
Freight charges, okay. General journal number 4, and it's going to be for $31.25, which we're continuing our balance. So 1 up plus your debits, subtract your credits, and you should get $225.
Okay.
So I'm going to go ahead and make this in penny form. Okay, so what is the next thing we got to do?
I go to your check and checking and report it.
No,
So we did the check register.
we already did the check register.
No, I'm talking about in the general ledger.
Um,
You gotta go to checking.
oh,
Yeah, we sure do. We're doing a check for 62.50.
yes, good. Okay, so we're gonna go to checking. Okay, that's what you meant. I was thinking about something else.
Okay. Well, no, I didn't know how to describe it.
Okay, yes, and we're gonna write check number, was it 1512?
Yes.
Okay, general journal number 4, and nope, we're on 12. And this check amount was for $362.50, right? $362.50. No, nope. What am I doing? It's just $62.50.
Oh, 62, right. Yes, that's right. This is just the freight.
Yes. Okay, so good. So now that we know that it, oh shit, sorry. So now that we have this, excuse my language, sorry about that. I dropped my phone. Okay, so 62.50. When we subtract that out of our bank, because we wrote a check, so now it decreased our amount to $4,769.79 because we wrote a check out, so it decreases our money, right? We're writing a credit, so it's decreasing our amount by that much. Okay? Okay? All right, now where do we go next?
Hire Silver State Electrical to upgrade electric wires.
We're not done yet. We have a couple more steps.
You have to go to the inventory sheet.
There's something before the inventory sheet.
The subsidiary account.
We got to go to the subsidiary ledger. Now, who was our vendor for this subsidiary, for this freight charge?
Straight line.
Freight line, yes. We need to make sure that we indicate that we paid them. That's very important because if you don't record this, right, how do you know that you actually received your inventory? And how did you know that you actually, another thing is that you also wrote a check. So you want to make sure that the check goes to the right vendor. Okay, So I'm going to go ahead and write check number 1512. Okay, my invoice number was 482. Post reference, my general journal number 4. My due date, I didn't have one. I did not make any prepaid, but my invoice amount was for $62.50. Okay, and lastly, I made the payment for the $62.50. I wrote a check. Okay, so therefore, if I do my formula again, if I were to, exactly, I don't owe anything. Okay, now for any reason that, let's say you do order something and then you decide to return it, right? And or even if you want to, because the whole shipping thing, if anything were to happen to your items, right? You can go ahead and report it back to them, right? If they send you another bill saying you didn't pay, but you have proof that you paid, here it is. Okay, so that's why it's good to keep track of every single thing. Okay? And then what's the last thing that we had to do?
Do your inventory sheet?
We need to update our inventory worksheet. That is correct, because now we're introduced to our freight for our products, right? So again, inventory is everything included to get the asset to the store. Okay, so we need to include the freight. Now we remembered that freight was $31.25.
31.25.
So that gives us a total cost of what?
Oh,
200.
Good.
225.
Okay, so Andrea just solved for the site for this one for the Supreme Coffee. So 193.75 plus 31.25 is in fact 225. Now let's go back to regular coffee because we're not finished yet. What do we know? How do we solve for the cost per item?
Divide that into the quantity.
Yes. We're going to divide our total cost with our total quantity. Okay, so we got 1.6 or $1.60. Okay. Now, we also have to move it straight into inventory, right? Because now we need to keep track of our inventory. We know that we have 125 pounds available, and this is going to be for 160. So therefore, we should know that it should equal to 200. So I'm going to go ahead and change these to decimals. Oopsies. Okay.
Can you stay there for just 1 second?
Yep.
Okay.
So here we indicated that freight was $31.25, and we got a total cost of $200. And if we divide that by 125, we should get $1.60 for each item that we sell. All right. So now we got to go fix our Supreme Coffee. Okay. So we already solved right here. It was $2.25. However, what was the cost per item?
$1.80.
Yes, it's going to be $1.80. All right. And then we're going to move this right along. Okay, so your total is $2.25. Okay.
Just 1 second.
Okay. So, okay, so now we know that every time we make a sale, we need to adjust our inventory.
Okay.
Yes.
Because we need to take out of inventory, but also we need to calculate the cost of goods sold. So again, because we're using perpetual inventory, this is what we're going to be using in between every journal entry that we make. So again, so keep this off to the side because we will be introduced to this next week. I mean, possibly we'll see how far we get. If anything, if we start week 3 next by tomorrow, then we should be on track and be able to see what it's like to have calculate the cost of goods sold. Okay.
Okay.
All right. So now we are completely done with that transaction. So let's go ahead and pull up our journal and our scenario. So we've already calculated and updated our inventory. And all right, let's see what's next. So now we finally move on to Thursday. Okay, so we need to change the date, so it's the 13th, okay? So now we're going to hire Silver State Electrical to upgrade the electrical wiring, okay? Do we need to journalize this transaction?
Not yet, no.
No.
No. Why?
Oh, if you haven't done anything, all we did was hire them.
Correct.
It is higher.
Good. All right. Let's see what else happened on the 13th. So the 13th we have here is we received a bill from LV Remodeling Company for the reinforcement for the foundation, okay, of the coffee grinder for $15.60, okay, and our invoice is going to be for $17.60 and it's due in 4 days, okay. So let's look at this carefully, okay. So because this is going to be included as the cost of our coffee grinder, right? Our coffee grinder is currently in the miscellaneous suspense. Okay? Because it's not completely done yet, I'm still going to just leave it in miscellaneous suspense. Because this work is going towards the total cost of getting the asset ready for service, I'm going to go ahead and dedicate this $15.60 and contribute it to the total cost of my fixed asset. Okay?
Okay. But
Technically,
miscellaneous expense also.
I'm sorry, say that again?
It goes in miscellaneous expense also.
Suspense, not expense.
Yeah. System.
Yes, because right now my coffee grinder is right there right now. And I want to include it as part of the cost of the asset. Okay, so why is it that when we saw LV Remodeling, right, we labeled them as a subcontractor? Why can we not journalize it as a subcontractor?
Because they're doing work for this specific item.
Good. I want to dedicate it, and we specifically hired them for this specific job to get the asset ready for service. So good. So what we're gonna do is we're gonna journalize miscellaneous suspense, and because it's a bill and we're not gonna pay it just yet, we are creating a what?
Accounts payable.
Yes, we're owing more money. So 613. Okay, and we're going to do miscellaneous suspense, and we're going to create an accounts payable. Oops, it's payable. And here I'm going to go ahead and indicate that this was from LV Remodeling. Invoice number was it 1760, comma net 4, since it's due in 4 days, and I'm going to go ahead and close my parentheses. My account should be 1990 and 20,000. All right. So, and it was for 1560. Okay. So let's go ahead and complete this transaction. Oh, wait, hold on. I wrote LV remodeling reinforcement invoice 1760. So I'm going to go ahead and write that in there as well.
Okay.
Okay.
Oh, remodeling reinforcement, that was my just coding in.
Yeah, just so that we can kind of understand that this was for the reinforcement for the coffee grinder. That's why we're putting it into miscellaneous suspense.
Yes.
Okay. So what comes next?
General ledger?
Not the ledger. Oh, yes, yes. Good. Sorry. I thought you said general journal.
No.
No.
We're just on journal.
You are correct. The ledger comes next. So miscellaneous suspense should be on page 16 for you guys, the last entry.
Yes.
Okay. Miscellaneous suspense. And we decided to drop in here on the 13th. Reinforcement for grinder. Okay. General journal number 4. And because we are increasing with the debit, it's going to be for 1560. So that means my new amount is going to be $3,088.07. Okay, so we just added that in there. And then lastly, because we had a bill, we're going to increase our accounts payable. Okay, so for 613, our item is going to be invoice number 1760. Okay,
That was page 16, no, not 16,
Page 17.
17. Okay.
oh yes, it's the next page.
That's payable.
Okay, so here that because we're increasing our bill, okay, the amount that we owe, once we indicate that in there, our account should have increased by up to $15,676.40. Yes, we're owing too much and so much money.
Yes?
All right. Okay. And what do we need to lastly do?
Subsidiary account.
Yes, we need to update our vendor because we received a bill from the vendor. So we're going to go to LV Remodeling, which should be
Page 7.
LV Remodeling. Okay, we received the bill on the 13th. There's no discount, so we don't have that. But we could write in here that it was for the reinforcement on grinder. Okay. Invoice number was 1760. General journal number 4. And what was the due date? It's due in 4 days, correct? So what is 4 days from the 13th?
17.
It's due on the 17th. Okay. And the invoice is for $15.60. Okay. And we did not pay for it, so therefore, if we did this formula correct, we should owe another $15.60, which gives us a grand total of $3,450 that we owe to LV Remodeling. Ooh. Okay. So let's go ahead and pull up our journal and see what happened next. Okay. Now it says right here, contract with Higher Temps, a temporary help agency for one person to work 8 hours per day through the 17th all the way to the 19th. So that's 3 days that they need to be so the 17th, 18th, and the 19th. So it's 3 days that we need to have a temporary worker. Bless you. Okay. And we're giving them an hourly rate of $10.50 per hour. Okay. So payment is going to be due on the 21st of June. Okay. So, do we need to record this?
Yes,
Why?
because we contracted somebody to come work for us.
Okay. So right now today is only the 13th. Did they work yet?
No, we're not open yet. No.
Okay, good. And second of all, did they bill us yet?
No.
No. We don't even know who this person is. We're just signing a contract to find somebody to work this position. And today is the 13th, and they have not even worked yet. So they haven't even started accruing any hours yet. So no, you do not need to record this. However, it is good to keep in mind because we will pay them on the 21st. Okay? So let's go ahead, and now it is June 14th. Oh no, are we going to finish?
And we opened.
Oh, we are going to finish. Okay, good. Okay, so I need to upload part 3 then, week 3. So I have that already available. Okay, so on the 14th of Friday, okay, so yay, it's the 14th of Friday. Okay, hold on. 14th of Friday, here. We decided to go ahead and pick up our flyers because we're going to open up on Monday the 17th, okay? It's coming right around the corner. We need to have our flyers and distribute them. So here on Friday, we decided to pick them up, and because we picked up the rest of the flyers, we need to pay for the remaining amount that is due or owed. Okay, so we owe them another $50 because they charged us $100, but we paid $50 in advance. So now we need to pay the rest. So how do we journalize this?
Advertising expense.
Correct. And we need to subtract out our prepaid amount, and we're going to charge it on our Visa credit card. So we're going to pay an additional $50 because we've already paid $50 ahead of time. So let's go ahead and journalize this. Okay. Oopsies, wrong one. 14.
Yes, 6:13.
Okay, so we have advertising expense. And oopsies. So we have advertising expense, and then what else? We need to prepaid accounts, and we're gonna pay the remaining amount off with our Visa credit card. So Visa payable. Okay. And what are my accounts for advertising expense? I think it's 60,000. And my prepaid accounts should be 18,600. And lastly, my Visa payable is 22,000. Okay, please double check that. But I think those should be correct.
Yes.
Okay, so because the total bill that I received on there was a total of $100, okay, we need to subtract out our prepaid amount, which was $50 because we paid in advance already, and so therefore we only need to pay the remaining of $50. Okay, and those should be equal. All right, and my description should be City Printers. Okay, there is no invoice or sales receipt number, but we can go ahead and indicate the 2,000 advertising flyers. Okay, and then that's it. All right. So there's absolutely no way someone can put a transaction here, so we don't need to put a line through it. But I'm still gonna do it just in case. So before I do anything, I'm gonna go ahead and draw a line through it.
Okay.
So let me go insert, shape. Yeah, I'm gonna draw a line from here all the way over here. Okay, so no one can enter anything in there. All right. Okay, and then now let's go ahead and go to our ledger. Okay, so here we have advertising expense. So that should be page
34.
34, top of 34.
Yes.
Okay.
Yes.
Yeah, I got it.
Okay, perfect. So here, I'm going to make the date for the 13th. And it's for,
14.
oh, yes, thank you. 6/14. We picked up all 2,000 flyers. All right, my reference is General Journal number 4. And I've increased it by 100, right? Because our advertising expense cost us a total of 100. Okay, so that means I'm going to go up 1. Okay, I'm going to add my debits and I'm going to subtract my credits, which should give me a total running balance of $185 that we spent for advertising expense.
Yes.
Okay. All right. Then we're going to go ahead and go to our accounts. Our assets. I believe this is going to be page 15 for you guys. The accounts payable, prepaid accounts.
Okay. Mhm.
Bottom of page 15.
Yes.
All right. Here, I'm going to go ahead and indicate 614. And there's actually really nothing that you can really say there except for I wouldn't know what to put in here because we already wrote 50% down payment on ad. So yeah, there's I don't know what else you can put there. So General Journal number 4. Oopsies, I'm in the wrong line. Wait. Yes. I am in the wrong line. All right, so General Journal number 4. and I'm going to credit my account for the $50. So now my account balance went back down to 6654.17. Okay.
Okay.
And then lastly, what else did I do? My Visa payable. So I'm going to go to my liabilities, and this should be page 18 for you guys.
Page 8, did you say?
18.
18?
Or 18, okay.
Yep. Visa payable.
Yes, these are updated.
Okay. And then I'm going to go ahead and write advertising, advertising flyers. Okay, I was like, why is this look different? Okay, I forgot the A. Okay, so advertising flyers. Okay, general journal number 4. And we increased our owing amount, right? Because we charged our credit card another $50. So therefore, I owe a total of $185. Okay. All right. And then lastly, where do we need to go?
Subsidiary account.
Subsidiary account. All right, we're going to go to city printers again. So we're going to go ahead and the 14th. Okay, so again, same thing. I don't know what to say here. I just know that we paid with the Visa payable. Maybe I'll write 50% remaining. Oopsies. Remaining, and I use the Visa to pay that off. No invoice number, general journal number 4. And I paid $50. So therefore, I should owe $0 again. Okay? But it gives me a grand total that my whole bill that I paid was $100 if I were to calculate this total. But in this case, I don't owe anything because everything was paid off via Visa credit card. Okay? All right, let's go back to our journal. And then let's go back to our scenario.
I have a question for you. Nick.
Yes.
Didn't we credit the $50 to the Visa card?
Yes.
Okay. Doesn't it mean it went down?
Well, what is a Visa? What kind of account is Visa credit card?
Liability.
Okay. And how do you increase a liability?
With a credit.
With a credit, and we credited the account.
Yes. Okay.
So therefore, it didn't go up. It didn't go down. It went up because we're owing more money, right?
I just think it should have been the other way. Okay.
Why would it be the other way? Did we pay our credit card off?
No.
No, we charged our credit card, so we're owing more money, right?
Yes.
Okay. So yes, so we are increasing our liabilities because we decided to use the credit card. Does that make sense?
Yeah, it makes sense.
Okay.
I don't know, just for some reason, I think it should have gone down, but it makes sense. But,
Yes, because we're using money that's not ours. Right? A credit card is basically money that's not ours.
that's a liability.
Yes, because we're gonna owe it every time we use it. We owe it. Okay, so good. So yes, just understand that because we're using a credit card, we're owing more money.
Yes.
Okay. All
We
right.
own all this money, we haven't even opened it up yet.
I know. And you're going to see how bad we are handling money in the future. Okay.
Goodness.
Okay, so now that we finally picked up our flyers, okay? So the next thing that we did is we actually purchased from restaurant supplies, okay? Because we need to buy cups, of course. We're gonna sell coffee. We need to buy cups to sell the coffee. Okay, but because we decided not to go through a vendor, we decided to go to a restaurant supply store. Okay, so here we bought 1,000 medium coffee cups for 5 cents each. Okay, giving us a grand total of $50. Then we also we purchased 1,000 large coffee cups for 7.5 cents each cup, which gives us a total of $75, right? And because there's tax on top of that, because we went to a store and bought it, they charged us $10.31. So therefore, our total due is going to be $135.31. Okay, so and here's a great one. We paid with our business credit card. Okay, so how are we going to journalize this?
We just posted to the ledger.
We don't post. We gotta journalize first before ledger.
Oh,
Okay, so
We're doing
medium coffee cups.
medium coffee cups. Good. Where did you find that?
Right there on the invoice thing.
Did I?
We purchased 1,000 medium cups and 1,000 large cups.
Okay, good. Okay, so you saw the answers ahead of time.
Well, no, I didn't look at the answers you put. I was just reading the question.
Okay, so always. Okay, so we the first thing you gotta do is you gotta figure out what did we buy. What did we buy? Okay, we bought medium coffee cups, right?
Medium coffee cups, large coffee cups, and we paid with the credit card.
Okay. Now, where do we go to look to ensure that we have this account? Our chart of accounts. That is correct. So in this case, I did give it to you here that there is a medium coffee cups and there is a large coffee cups. All right. Medium cups and large coffee cups. All right, and we used Visa payable, right? We use our business credit card to pay off this amount. So here is restaurant supplies, okay? That's all we have because that's all the information we were given. Okay, we went to restaurant supplies, which
That don't count.
I'm gonna say we bought 2,000 cups. Okay. So go ahead and go look up in the chart of accounts exactly where did we place this? What's the account number for medium coffee cups?
Medium coffee cups is 11,760.
11,760. Correct, right here. It's under business supplies, right? Okay. So 11 what was it? 60 and 65? 760 and 765. So we're going to indicate that right here. 11,760 and 11,765. And my Visa payable is 22,000. So let's go ahead and look at our items that we bought. So here we have the total amount right here is $50 and $75, right? But we also have to include the tax. So how do we split the tax here?
Divide the 1031 in half.
No,
No.
you cannot ever do that.
Yeah, no, you multiply the cost, $50,
Uh-huh.
by the sales tax rate,
Good.
8.25%.
Good. So if I do that, I get 5413. And if I do 75 times 1, oopsies, 1.825, I get 8119. Now, let's add these together and I get 135.31. Perfect. So now, but if you look carefully, does 13 and 9 plus 19 equal 31? No, it doesn't. So we gotta double check our answers here and determine which one I'm gonna choose to lower it down. Now, so I believe it is the smaller amount, just because I think the next number is a it's a 5, I believe. Let's see. Yes, it's 125. So what I'm gonna do is I'm gonna take that extra penny and I'm gonna take it and I'm gonna take it out of the top one. So it's only going to be for 54 and 12 cents. Okay? Because I believe this one is going to be like 8.7. So this one is higher. Okay? So
For 12,
yes, 54.12 and 81.19 to get us 135.31. Okay?
Okay, what do we do with that extra penny? Where's it gonna record that at?
We don't, because we took it out because you remember what's the rule of journalizing?
They have to balance.
They have to balance. And what's the second thing? Did you pay an extra penny to towards sales tax?
No,
No, you didn't. You only paid $10.31. Why do you need to pay $10.32? So you want to make sure that your the even amount of sales tax that you did pay matches exactly how much you actually paid.
Okay,
So in this case, we actually only paid $135.31. So we just have to pick and choose which one to take that penny out of, just because if on an individual base, if you round up or down, it will give you a cost. But in this case, this was actually calculated as in a full amount. So we took the sales tax and we multiplied it for the total amount, which was 125,
yeah.
instead of individual. Okay, because we bought it together. So yes. Okay, so here we've made sure that everything was panned out and was even. So now we can go ahead and
check register.
why check register?
This is like check.
How did we pay this?
by Visa.
You paid with
Oh,
Visa?
that's right, I'm sorry. This is a Visa.
Yes, it's a Visa.
But ledger.
Correct. Okay. So now we go to the ledger and we're going to go ahead and go to our assets and we're going to record our medium coffee cups and our large coffee cups. So for this one, let's see. It should be page, let me see, 1, 2, 3, 4, 5. It might be on page 6 or 7.
Page 5,
Page 5?
page 5.
Okay, so 6, 14.
Yes, right at the
Yes.
top. Oh, wait,
Yeah.
medium.
Medium coffee cups. Yes. Okay. So here I can go ahead and write I bought 1,000 cups just so that I can keep, track of what I actually bought. My post reference is general journal number 5, not 4 anymore because we just finally got a new journal. And we increased it by $54.12. Which means since we're starting off at 54.12, that means that is our beginning balance. Okay. And then lastly, we gotta do our, not lastly, secondly, we gotta do our large cups. So for 614, so for, 614, we also purchased 1,000 cups. And post references general journal number 5. And we increased it by $81.19, which should be what we start with. Okay. And then lastly, we need to update our Visa payable since we charged more money to it. Okay, so here I'm gonna go ahead and indicate the date. And I bought 2,000.
Visa's on what page? Okay.
18.
I'm getting there.
Yeah, I was on 16 when I bought it. I knew that wasn't the right page.
Oh, God,
And we increased our amount by 135.31. Okay. So we bought 2,000 coffee cups. Yep. For a total of $135. So that means my new balance total is going to be $320.31. That's a lot.
Yes.
Okay. All right. There's one more thing we gotta do.
Subsidiary account.
Yes. In case something happens to the cups, we have too many cups left over, we can return them. Because as long as we have the receipt, we can return anything. Right? Especially if we haven't opened the package yet. So we definitely want to record this as well as, in case we do need to return it, we have the receipt and we can refund it. So restaurant supplies.
restaurant supply.
Yep, restaurant supplies.
That's on page 9.
Okay.
Yeah.
614. Okay. Notes, I'm going to say 1,000 medium and 1,000 large cups. Okay. Invoice number, there isn't one on the sales receipt, is there? I don't think so. Post reference is going to be general journal number 5. Due date, we don't have one. Prepaid amounts. Oh, I forgot to indicate that I paid with a Visa.
Oh,
Yeah. Okay, so the invoice amount is going to be for $135.31. And I paid this whole amount with my Visa credit card. So therefore, I owe nothing. Boom. Okay. So let's see what we have left in our thing, and I will go ahead. I think we have one more, if I'm not mistaken. Yes, we have one more transaction, and then we'll call a break, do the trial balance, and we might be able to get started with week 3, okay, if we have enough time. So let's go ahead and finish off this last entry. So on the 14th, okay, we did an owner's withdrawal for $1,500 from the bank, okay? Why did we do this?
So we had cash for the store when it opened.
No, we already did that. We already pulled out cash for the cash register.
So,
One of our owners wanted some money.
There's only one owner.
Oh, yeah, the owner wants the money out.
Well, duh. I did all this work for 2 weeks. I'm not gonna pay myself.
Gotta get paid.
I gotta get paid. I gotta take money on my own company, man. I can't just survive 2 weeks without anything, no food, no money, no anything. I've done all this work to set up my business. I owe $15,000. All these things happened, but it's because I worked so hard to get my business. I made contact with all these people, so therefore I deserve to take $1,500 out. So I'm gonna go ahead and write myself a check. Because that's the easiest way to measure yourself. Okay, it says you withdraw from the bank, but in reality, a check is a little safer. Okay, instead of actually going to the bank and just withdrawing it, it's safer if you just write a check. So we're going to indicate the date. And we're going to do an owner's withdrawal. Owner's withdrawal. And it's gonna come right out of my banking account. Okay. Checking, and I'm going to go ahead and write owner's withdrawal money. Owner withdraw money. Okay, so the one thing that I can tell you about an owner's withdrawal, right? Because you're the owner of the company, you can take out money whenever you want from your company. It doesn't have to be during a payroll period. It doesn't have to be every once in a while. As long as you don't withdraw from your company to the point where it goes bankrupt. Okay, you need to be reasonable, but also have enough money to do so. And then of course you own the company, so you could do whatever you want. You could take out all the money if you want. It's your company, right? This is your original investment. So that is what owner's withdrawal is. It's basically you taking money away from the company, but it's your money. It's your company, your money, because you and the company are one. Okay? So what account number is owner's withdrawal? 32,000. All right, and then checking is 10,200, and we're taking out 1,500.
10,200?
10,200. 10,100.
Yeah, 10,100.
Okay, so here we're taking out 1,500. Okay, and I forgot that we're writing ourselves a check. So what check number are we doing?
Check register should be check number 1513.
1513. And remember, we're doing for 1,500. And I chose that the owner of the company, right? Because I'm the accountant. Owner of the company is Mr. Bob Mason. So we're going to write Bob Mason. When you guys move into QuickBooks, you'll understand why this name is so funny. Okay. So Mr. Bob Mason, he's Mr. CEO, president of the company. I'm the accountant. You guys are the bookkeeper. Okay. So there you go. we wrote a check out to the boss, which is Mr. Bob Mason. Okay, and now that we know that the check number is for 1513, we can go back to our journal, and we're going to indicate that we wrote the check out number 1513. Okay, so what are we gonna do next?
Go to our, ledger, go to our ledger.
Yes, we're gonna go to our ledger. Okay, now this is an equity account. We're finally diving into an equity account. So let me see what page owner's equity is. Why is it not going through? Did all my account names get crossed out? Oh, I'm in the wrong one. I think this is... No, this is the right one. Oh, it's my general journal. Oh, man. I went to the wrong one. Okay.
In the ledger, right?
We're in the ledger, yes. So let's see. Let's see. Ledger account.
23.
23? Perfect.
Yes, 23.
Perfect. Page 23, guys. Okay. So let me pull up my journal again and my ledger. Okay. So here it's going to be page 23, you said? Under owner's withdrawal. Okay. My date is going to be the 14th. No, you don't have to have a real description. Because you're just taking money out. Oh, yes, check number, good one. So check number 1513. Okay. Post reference is my general journal number 5. And because it's in my journal, it's a debit. So therefore, I'm going to debit my account for 1500. So that means my balance in my owner's withdrawal is going to be for 1500.
So our new number's gonna be 31,500.
What's 31,500?
Our balance.
In what?
Oh, no, that's right. Here it's subtracting. Never mind. There's 0. Okay.
I don't know where 3,500 is.
No, I was forgetting that the first one that we did was a credit and this is a debit, so we would be subtracting, not adding.
Yes.
What are we adding?
For our running balance.
There is no previous balance.
Yeah, I see that now. That's what I was saying.
Oh, okay. Okay, I got you now. All right. I was very confused. All right. So here we're starting with our owner's withdrawal. Okay, we're starting fresh. So this is our first entry. So therefore, our running balance is going to be a debit balance for 1,500. Then we gotta go to our checking account because we wrote a check to Mr. Mason. So check number 1513, okay, which is going to be general journal number 5, and that's going to decrease our account, correct, by 1,500. And here that means with that decrease, it's going to lower our account, our checking account to $3,269.79. Okay.
Could you wait there for just 1 second?
Yeah, we're done. All right.
Thank you.
Okay. Do we need to go to the subsidiary ledger? Why?
No, we,
In a transaction,
Oh,
Say that again. So Lee says no. What? And Andrea and David, you said yes?
yeah,
there,
if you have
do
transaction,
we have one for owner's equity?
Oh, that's a ledger account.
Oh, that's right, so we
Okay.
wouldn't go to the,
no, it's not in,
it would be in the, because he's not a subsidiary, he's owner.
Exactly. There is no account for the owner. Now you can create one, but he can be considered as other because he's not a customer, he's not a vendor, and he's definitely not an employee. You can't be an employee if you're the owner.
Right,
All right. So therefore, we don't need to update the subsidiary ledger because it's the owner. He can do whatever he wants. Okay. So understanding that, so we don't need to update the subsidiary ledger. So we are done with the journal. Okay. Now, what I like to do for the journal is I actually like to highlight one of the bars. Okay. I didn't do this last time, but I feel like it's necessary just so that it keeps good track for yourself. Okay. And I'm going to go ahead and fill this in with, I don't know, black. Okay. And what I'm going to do is I'm going to have white writing in here because what I'm going to do is I'm going to indicate that this is the end of my period because right after this, right, we're going to be doing our trial balance number 2. So that's why I'm going to indicate trial balance in here, which it isn't showing up. Because I want... Where is my trial? There you go. I'm going to indicate my trial balance here just so that I know that I stop here on the 14th and that I'm just testing out just to make sure that my debits and credits match. Okay? And I want it centered. Just so that I have some kind of, stopping point, just to let you know that all my credits and debits match, right? Because we're going to be doing a trial balance, right? Because the last thing that says on the scenario is, okay, create your trial balance, okay? So right now it is, let me see. It is 3 o'clock. Okay, so we're going to take a quick break.